My name is Mike Silagadze. I'm one of the founders and CEO of ether.fi, and I'm going to talk to you about our vision for what stablecoin banking looks like. First of all, maybe before I begin, how many people have heard of ether.fi? Okay, a few hands went up. How many people actually use the product, whether it's staking or the card or anything else? Okay, all right. I've got some work to do. What is ether.fi? ether.fi is what we call a DeFi bank, which is to say a full end-to-end alternative to traditional banking. So if you've used products like Revolut or Nubank or Chime, ether.fi looks and feels very much like that. If you download the app, you'd have things that resemble what you'd get from a traditional custodial bank, but in a non-custodial crypto-native framework. So a full end-to-end alternative to banking. We're one of the largest DeFi protocols on Ethereum, built on Ethereum. We have about $11 billion in TVL. We have hundreds of thousands of users, and we have the leading non-custodial credit card on the market. If you want to check it out, just go to ether.fi. You can sign up. You can try out the product, and hopefully that'll give you a little bit of a vision about what the future has in store. Okay, so when you think about traditional banking, there's a number of services that banks provide for most people. You need to be able to have an account into which you deposit your money, and that account, in some cases, might pay you an interest rate. You need to be able to take some of the money from your account and deploy those assets to invest them into stocks, bonds, whatever. You need to be able to borrow against your assets and spend them. You need to use them in your day-to-day life. And if you want to be able to take more speculative bets, you want to be able to trade your assets. So if you look at ether.fi, we have a vertically integrated suite of products in one single app, an iOS app or a web app, whatever you prefer, called Stake, Liquid, and Cash, which respectively give you analogously a savings account powered by staking, where you can hold your USD stables or ETH or BTC or soon Hype tokens as well. We have Liquid Vaults, which allow you to deploy your assets in a single click into DeFi and earn yields that can be as high as 10-15% on your stables. Obviously variable with DeFi. And then we have Cash, which is a non-custodial credit card that lets you borrow against your portfolio, everything that you have in your ether.fi account, and spend it in your day-to-day life. And soon, coming towards the end of this year, ether.fi Trade, which is will allow you to borrow against your assets in the vault and open up perp and spot positions powered by Hyperliquid. These are separate products, but as I said, when you use it on a day-to-day basis, it's one integrated experience.
At ether.fi, our mission remains to give you everything you need to take charge of your wealth and break free from the limitations of traditional finance. And now it's easier than ever. Bank transfers are here, allowing you to move funds between ether.fi and your traditional accounts anywhere in the world, all from one place. Fast, simple, global. The Cash credit card is now physical. Spend your crypto anywhere, even at ATMs. Groceries, flights, late-night snacks, your crypto, your life. No selling, just swiping. With club membership points, we're leveling up how rewards work. Connect your wallets and earn points for everything you do across DeFi with ether.fi. Do more and earn more. And we're pushing deeper into DeFi with Be Hype, a new liquid restaking token coming soon to Hyperliquid. This will be the catalyst to our new product, ether.fi Trade, allowing you to trade spot and perps with ease. Get ready for the next phase of ether.fi.
Great. So one of the things that makes ether.fi unique as a DeFi protocol is that we actually have a real business model. And across our various lines of business, across the various products, you'll find sources of revenue that are very much analogous to what you would see from traditional banking. So in a traditional bank, when you deposit your dollars, and I'm grossly oversimplifying here, the banks earn some sort of rate of return, maybe from T-bills, maybe if they decide to gamble on mortgage bonds, whatever it happens to be. And then the bank takes a slice of that and gives you a small share of it. With ether.fi, the fee that we take is much smaller. We take a small cut of staking rewards, and the majority of the yields in a transparent way are passed on to the user. Again, fully non-custodial, fully transparent on chain. With our DeFi strategy vaults, as I said, that's like DeFi on autopilot or the easy mode, where you click one button and it deploys your assets, whether it's ETH, BTC, stables, into the best DeFi strategies out there. And ether.fi generates revenue on that, on the management of those vaults. And then finally, on the cash product, the credit card, ether.fi generates revenue on the interchange, FX, travel rewards and bookings that go through our platforms. And then if people borrow against their assets, we make a spread on the borrow. So again, these are very analogous lines of revenue that traditional banks generate. But the power of it is that it's fully non-custodial, it's on-chain, it's transparent, the fees are a lot lower, and the users get higher rewards. So the reason this is a significant development is that if you think about ether.fi as an alternative to a traditional financial institution, if ether.fi was a bank, let's say, with $11 billion of deposits, a company like that would likely have 500-600 employees, would have a cost basis of around $100 million in terms of the cost to operate. Whereas when you look at something like ether.fi, we have about 30 employees, and our cost basis to operate is closer to $15 to $20 million. And so that's remarkable. That means we can effectively provide an alternative service to traditional banking at less than 1/10 of the cost that it would cost traditional financial institutions to provide, which means we can be a lot less extractive with our users. We don't need to charge as many fees. We don't need to abuse our users with all kinds of hidden charges. Instead, we can just focus on providing a really great product with low fees and great rewards. And for that reason, we believe that there's an opportunity here to re-platform certainly the neobanking space, which is about $175 billion a year in revenue, which is about 100 times more revenue than all of DeFi combined at this point. But broadly over time, even all of banking. And I think we've been doing a pretty good job of that. These are the charts are small and they're also out of date. But our TVL has continued to grow. We have close to 3 million ETH staked on the platform, which is about, I think these days, $10 or $11 billion. Our card is doing about just over $1 million a day in transaction volume, which it makes it the largest non-custodial card on the market, and certainly one of the largest crypto cards on the market in general. And the growth has been just really phenomenal over the last little while. And we've been around for about 2 years, which, from a fintech standpoint, being able to grow at this kind of pace over that period of time is, would make us one of the most attractive fintech products out there. And as I said, this actually generates revenue. So our first year in business, which was 2024, we generated about $26 million in revenue, and we were profitable, net of any token emissions and all the games the DeFi protocols play. And this year, we're likely going to have an exit velocity of over $100 million in revenue, probably about $65 million for the year. So remarkably fast growing, really efficient business, all powered by DeFi. And we also have a governance token called ETH.fi. And so the way that value accrues to that governance token is through revenue-powered buybacks. So we take a portion of our profits, revenues and profits from the protocol, and that goes to buy back the token from the open market. So far, again, I think this is already at a date. We've done about $7 to $8 million of buybacks just over the last, mostly over the last quarter. And we plan, obviously, to continue to do that as we scale. Great. So hopefully this gives you some idea of what a stablecoin powered bank looks like. It's not going to be necessarily something like a traditional bank just using stablecoins for transfers. What it's going to be is an end-to-end revolution in what banking actually looks like, a full end-to-end alternative powered by crypto and DeFi. Thank you.